The future is green when it comes to ESG or sustainable investing. At the end of 2019, green bonds or fixed income products designed to fund environmentally friendly projects reached $26 billion. According to the Hong Kong Institute of Monetary and Financial Research, mainland Chinese entities accounted for more than 70% of that, while financial institutions accounted for around half of the green bonds issued.
We need to encourage more issuers to do more these type of issuances. I think when you think that the green bonds market, whilst reaching more than 1 trillion cumulative issuance as of December last year, it is still 1% of the total global bond market, which is not a lot.
Stock market operator HKX has already laid the groundwork to ensure that listed companies take ESG reporting all the way up to the board level.
The most recent amendment is by far the most important, which puts us, the leader of all exchanges. We require the board to be to consider ESG and to incorporate the ESG strategy into their overall corporate strategy. So I think with the coming ESG reports, with these enhanced disclosure, we see that ESG should no longer be a tick-the-box exercise.
But the checklist to green leadership is long. Hong Kong can lead in financial product innovation, but the demand will have to come from the real economy. Businesses are starting to realize it's more an opportunity rather than a cost or a burden.
It's very hard to compare a green bond with a like-for-like normal bond, but we have seen that with the German government's twin bond issuance, where they issued a conventional bond and a green bond with the same terms in terms of maturity and coupon, and we see this greenium creeping up over this quarter to now around 5 bips. And I think even though this is a global example, I think this is going to be true for Asia as well, and increasingly over time as the demand for green assets grow.
Last month, China indicated that Guangzhou, as part of the Greater Bay Area, would host a new futures exchange for carbon emissions futures and other green products. HKX has a 7% stake in the new marketplace. Carbon emission futures are new in China and will help the world's biggest emitter of greenhouse gases play catch-up to the US and EU, where similar financial instruments are found.
There is a working group having co-led by the EU and China to find sustainable activities which are coherent and apply across regional taxonomies that are members of the IPESF. And so I think that starts as an initial framework for Hong Kong to operate and act as this global financial conduit between China and the rest of the world. Of course, there are going to be regional variations. So China's onshore green market is operating in quite a different style and a different structure to how things are operating globally. I think that's also a way for Hong Kong to act as a role in the global markets, given the interest in domestic markets, but amongst foreign investors as well.
Hong Kong is also expediting a so-called Bond Connect mechanism, a cross-border investment channel that will enhance the access of China's vast bond market to Hong Kong. Both central banks, the Hong Kong Monetary Authority and the People's Bank of China have already set up a working group to drive a southbound product launch within the year.